Okay, now we'll start the phase one, SAP S4HANA configuration. This is regarding financial accounting. Again, no prerequisite required for this course, but this is an advanced level course. Okay, but no prerequisite required. So if you have no idea about this thing, it's okay. But it is advanced level course. So after this chapter or after this lecture, you will be able to understand the structure of ERP configuration curriculum that we already talked about, but especially in this case, the phase one. And phase one is related to financial accounting. We'll define the organizational structure for financial accounting. Okay, we'll try to analyze the scenario. We'll do the steps required for financial accounting configuration. We'll try to, discuss some common processes in financial accounting, and we will try to identify the integration point between financial accounting and controlling. Now, any question here? And I'm expecting some questions here from you guys. These are the learning objective, by the way.
Excuse me, sir. Could you just back to the slide scenario?
The scenario slide is gone. The previous one, the previous slides you were talking about? You mean this one?
No.
One second. One second. This is.
Yes, here.
This one?
Yes, this one. You said that all these positions related to finance or to material management. So could you just repeat it?
Okay. Actually, the scenario is that in the company, there's a problem going on. Okay. So employees are talking to each other. They are sending email. For example, one sales department received a sales order, and when they checked in the stock, they found, oh, the sales order they cannot meet because some of the material is short. So they requested the planning production guys. So they are writing between the emails. So they're writing emails to the production guys and then the warehouse guys and checking for the material and looking for the purchase orders and talking to the accounting guys. So whole conversation will be between these 3-4 guys. They are working in different departments. So from that scenario, you will be doing the analysis, and you will be trying to identify the problems. So this is the whole task, and then we'll try to find the possible solution for those, how to fix those things, and then we will implement those changes into the ERP system. So company should not face those kind of problems. So this is like, first of all, we are going to tell you that the company is having these problems, and then you will try to find the solution for that, and then we'll implement the solution. This is what the whole story is. So scenario will be after this lecture, and then you will find the scenario, inshallah. I'll give you the scenario for reading, and then you can, Is that okay? No?
Okay.
Okay.
Thank you.
No problem. So let's see the introduction. Again, same slide. We have navigation course. We have introduction to global bike, and then finance we'll be implementing. This is the configuration case. So remember always, first step is we will create the enterprise structure. Then we'll try to do the business processes, business rules, business processes, some default values we will set here, default formulas we will set here. Then we will enter the master data. So once these 3 steps are completed, then we can do the testing or the finance of the case study or the module. Okay, so we already talked about that we will have 5 steps in this case study. That first step is the introduction to the configuration case. Then we'll do the analysis of the scenario. We'll identify the problem. Then we will find the solution, and then we will implement the solution. And for this, you will have a material available that you can, read it and try to. And these are the deliverable, by the way. So from the scenario and conversation and the symptoms and issues, you'll try to find the list of the problem. Then referencing problem, you'll find the solution, like that. So we have like a scenario, like, the global bike, they started in 2008, and they start implementing SAP S4HANA. So we have a phase 0, and then we have a phase 1. In phase 1, they will be implementing that, the finance module. So now you have to, I believe, read the whole scenario and then try to find the solution from that scenario. I'll share it with you guys. And then we'll work on the enterprise structure. This is the enterprise structure, guys. When I say enterprise structure, if this is like, we have 3 types of data in SAP. The first one data is enterprise organization level data. The second one is master data, and third is transaction data. Now, the organization level data is actually the enterprise structure. This, if you see, this is the flow chart of a company. So this is the structure of a company, by the way. So this is my global bike, which is my client. In SAP, I will say client. But in the business term, I can say, oh, this is my, organization. We have like, this organization has 2 companies, one Global Bike Incorporation, which is United States. This is like a Global Bike Germany. In SAP term, every company, we call it company code. So this is my organizational data, guys. On the right side, which I'm saying client is my organizational data, company code is my organizational data. Any code I gave to my organizational structure, any code that I gave to my organizational structure is my organizational data. This is the first thing that we will implement into our SAP configuration, ERP configuration course. So we will create a client, or we will not create a client, it is already created, by the way. We'll start from the company code. So we'll create a company code. Then we will create the chart of account. Then we will have a business area. And then we will have like credit control area. So we will set up all these 4 things, 4 organizational data. If we miss one of them, we cannot use the ERP system. For example, if we miss the credit control, we cannot apply the credit control on any of the customer. If we miss chart of account, we cannot do any transaction. If we miss company code is the basic for financial accounting. If we have no company code, no financial accounting system. So these are the basis of the financial system. These four, you can say that organizational data is the base of my financial accounting system. Any question, guys? Okay. So what was the first step? First step is to enter the enterprise structure or enter the organization data. So organization data is same as enterprise structure data. As we know that client is the global enterprise or a consolidated concern or holding or corporation. We have like we have so many. Al Uthman Holding in Saudi Arabia is one of the, so we call it Al Uthman Holding. So that is a client, or that is an organization. So client from the SAP point of view, Al Uthman Holding. Al Rashid is a corporation. Okay, some big enterprise. So our case study is related to Global Bike Group. This Global Bike Group has two companies, one in Germany, one in the United States. And this client is defined by 3-digit integer. Guys, do you know what is your client number? Here I have given the example of 200. Yeah. So what is that? Can you write down the client number of your company that we are using? Yes, 408 is our client. Yeah. Now, the company code is the smallest organizational unit of financial accounting. If we did not create the company code, we cannot do any financial accounting. And what we do on the company code level, all the transaction or the books are maintained at company code level. With the company code level, we can develop or we can create the financial statements, profit and loss statements, So all the accounting reports are happening on the company code level. So we have two company code. One is Global Bike Incorporation US, and the other one is Global Bike Germany. So the US company, we call it US00. And for German company, we say DE00. Okay, DE stands for Germany. This is the code for the Germany. We have a chart of account. This is another major organizational data that we have to, create or we have to enter. Chart of account, basically, it consists of general ledger accounts. And this chart of account basically helps you in organizing your accounting data. So we have chart of account that we will assign to the company code. And that we call it operative chart of account. And this chart of account can be used in financial accounting and cost accounting. Now, we have two types of accounting. One is financial accounting, and the other one is cost accounting. Now, when we say cost accounting, basically cost means expenses. We have another name of cost accounting. We call it managerial accounting. Okay. So you can say managerial accounting, or you can say cost accounting is one and the same thing. So we have two types of accounting, financial accounting and cost accounting. Financial accounting, we are doing it for external persons, external bodies. For example, we have a loan with the bank. So we are preparing financial statements, income statement, profit and loss statement, or balance sheet for the banks. Bank from where we took the loan. Or we have to prepare financial statement or income statement for stock exchange because our corporation is enlisted on the stock market. So we have to give this information of our profit and loss to the stock market. We can prepare the financial accounting any profit and loss balance sheet for the tax authorities. So that is why we call it, this is external accounting. Now the cost accounting on the other side is the internal accounting. We can create financial statements, we can create income, profit and loss statement, we can create balance sheet, we can create anything, but for internal purposes, for internal use. We cannot give that financial statement to the external parties. This is for our own decision making. To improve the profitability of the company, we can have different kinds of internal reports. That is the part of cost accounting. Now, and that reports, or you can say that income statements or balance sheet or any other accounting report is not possible.
روحي قلبي جيبي لي معاكي نسمة واحدة من اسمها.
Okay. So where we were. Yeah. So if we don't have the chart of account, then we cannot prepare any report like balance sheet or income statement or any other account. So this is the base. So chart of account provide a base for all these kind of reports. And now the same chart of account we are using in financial accounting and same chart of account we are using in cost accounting. So from the chart of account point of view, both we are using in both accounting. So we have like one global chart of account for the global bike, and that code is for that any chart of account is GL00, general ledger 00 is the name of our chart of account. So all the chart of account maybe like it has like 100 or 200 or 500 codes, accounts, but they're all maintained under GL00. We will use this one, inshallah. Instead of creating our own chart of account, we will copy the chart of account from this global bike company for our company that we will establish, inshallah. We do have a credit control area. This is also an organizational unit that represent area of responsibility for monitoring the credit limit. You have a credit card and your credit card has a credit limit. Oh, there is a department who is checking and maintaining your credit limit transactions. So that is the department that is looking after your credit. So similarly, the company has a credit control area. This Osman Holding or the Global Bike Holding or Global Bike Incorporation has a credit control area that monitor all companies' customers for their credit limits. So for example, if you have given a credit limit to a customer for like 100,000, then this department will make sure that every company can see that this has 100,000. If you consume 50,000, then every company can see that, okay, he has consumed 50,000 and he has left with the 50,000 credit. So this is what the job of credit control area. So it is this credit control area is on the top of all company codes, by the way. So this credit information will be made available for customer, every customer. Yeah, we have talked about. Okay. So in the global credit management, code is GL00, again from the general ledger. We have a business area. This is also another interesting concept. This is also part of financial accounting that represent a separate area of operation or responsibility. For example, I have like in my company, I have like 3 different types of businesses in my United States company. So one business is, for example, I'm selling the bikes. Another business is flower business, you know. And then I have another business is like I'm maybe selling the cars. So I have like 3 businesses. I'm selling the cars, I'm selling the bikes, and I'm selling the flowers. So what I will do is, and I will create 3 different business areas. If I want to see the profitability of flowers, for example, or I want to see the profitability, how much profit I'm making from the cars or from the bicycles, then I can create different business areas. So if I say, okay, can you show me the profitability of flowers business? Then this business area, I will say, okay, business area number 001. So it will display me only the flowers business profit. If I say business area number 2, then I may see, you know, maybe bicycles profitability. Business area 3 is maybe cars profitability. But from financial accounting, if I say company code US 00, oh, then it will give me the combination of all 3 profitability. I cannot see separate profits. I will see the overall business profit. Okay, I'm making like maybe 1 million, but I will not know in 1 million how much is the contribution of flower business, how much is the contribution of car business or bicycle business. I will not come to know. But if I have created a business areas for all those 3 products, then yes, I can do that. You know, I can see the profitability from flowers and profitability from cars or bicycles. So this business area is for internal accounting. Okay, internal profitability, internal decision making, not for the external. For external, we have the company code. Any report we prepare on a company code level, that can be used for tax authorities, that can be used for, you know, stock exchange, that can be used for, you know, for banks to, you know, show them that we are making profit, or we are on the loan, or we want to take a loan, that we have to show the health of the businesses. That is, you know, any report you develop on the company code level. Business area is for internal accounting. That is, you know, I can see any profitability in from bicycles, or I can see the profitability from the flower business for my internal decision making purposes. Please tell me, is this business area belongs to financial accounting, or it belongs to cost accounting? I'm expecting answer from everyone.
Cost accounting.
Please write down the chat, so it's okay. Cost accounting, I got the answer. Guys, this is when I'm expecting from everyone, I want everyone to type in the chat. No problem at all. No problem at all. Yeah, cost accounting, yes. Because it is for internal purposes, not for the external purposes. Yes. Very nice. Okay, now we have like, when we talk about the controlling, okay, guys. Now, controlling has its own organizational structure. Like we were having, what you call it? For the financial accounting, like we were having. You have a client and the company code, and, you know, then we have chart of accounts, and then we have, what was the last thing? Credit control area. Now, in this one, in the controlling, in internal accounting, we have the client, same. Then we have the operating concern. Okay, operating concern could be, you know, your any area of profitability that you want to measure. For example, sales of a particular product, sales of a particular product in a particular country. That could be, your area of concern that you want to see. So these kind of reports we can get from the operating concern. Operating concern has the controlling area. One controlling area can have one company code or one company or many companies. So this is how we can. So we have like 4, organizational data in the controlling. The client is by default, operating concern, controlling area, and then we have a company code. You see? We do have a business area as well. I think they didn't mention here, but we do have a business area as well. And that business area is also the part of controlling. This controlling area is only for cost accounting. So it is only for internal accounting purposes, not for the external accounting purposes. For external accounting purposes, we have the company code. But this organization, controlling area, it is an organizational unit, but it is closed system for internal accounting or cost accounting. So this controlling area can have one company code, or it may have more than one company code. It may use different any company code. For example, we have a controlling area for Middle East. Okay. Now in the Middle East, we have a company in Saudi Arabia and company in Bahrain and company in Middle East in the UAE. So all 3 companies will be dealing with different currencies. So under one controlling area, we can have like 3 different companies in 3 different countries with 3 different currencies. It is possible. But they must have the same chart of account. This is the only condition which we have to. If they are under one controlling area, they must use one of chart of account. Now, in this example, we have like 2 controlling area in global wide. One is North America. We have like 3 plants in United States, and one in Europe. We have in Germany. We have 2 plants over there. Now, the controlling area we will be using will be NA00. They just gave a code of NA00. Operating concern is also the one of the organizational data. This represent a part of an organization. Then it is not representing the whole organization, a part of the organization for which the sales market is structured. For example, we have a product group, or we have a customer group, or we have a country or distribution channel. As I mentioned before, the particular customer group in a different country, in a Saudi Arabia maybe. We are looking for some reports, some analysis. And product and customers, which product, top 10 products, top 10 customers with different countries, so we can have these kind of reports. That is only possible with the help of operating concern. This operating concern, we can use it used for profitability analysis to see where we are making the money, we are losing the money, or something like that. And several controlling areas can be assigned to an operating concern. For example, Al Usman Holding has like 2 controlling area, one in Middle East. Okay, we have three companies in Middle East, and then maybe 4 companies in Africa, in Sudan, in Libya, in Egypt, in other Somalia, in other countries. We are having So we'll create two controlling area. One is for Middle East and one is for Africa. And then we can have the profitability analysis. Now we can see if we are in a company code, then company code of a different company, specific country. In a company code of Saudi Arabia, then I can only see the customer of Saudi Arabia. But if I have a operating concern, then under this operating concern, I have like controlling area, which has Saudi Arabia, which has Bahrain and UAE. So in that controlling area, I can see the profitability of, for example, bicycles. So it will give me the profitability of bicycles in Saudi Arabia plus Bahrain plus UAE. So that is what I'm saying, the sales market segment or sales market, I want to see the profitability of flower business in Africa. So Africa, I have another controlling area. So I can say, okay, give me that controlling area. Hey, controlling area of Africa, please give me the profitability of bicycles or flowers. So I can get the report from all countries, including Egypt, Sudan, Somalia, Libya. It will give me the profitability from all these countries' transactions. Oh, I want to see overall, yani from Middle East and from Africa. Then I can say, okay, operating concern code, can you give me on this level? We are having different levels. So on this level, if I say, then I will get the report of Saudi Arabia, Bahrain, and UAE, and then Egypt, and Sudan, and Libya, and Somalia, from all over the world, from this operating concern, about that particular flower business. Guys, any question here? Any question? Is that clear? Well, either you guys are tired or I'm doing a good job. There is one thing. Okay, now, if you see here, we have a client, okay? The client is on top of everything. Then on the client, we have operating concern. And the code is GL00. Then on the operating concern, we have two controlling areas. One in North America, NA00, and the other one is Europe, EU, any numbers, 00 or 01 or whatever is there. Then on these controlling area, we have credit control area. Now, in that credit control area, this is like GL00, has a chart of account. And then this chart of account is for all company codes. You see that? This global concern is for all company code. This North America controlling area is only for the North America. It could be US, it could be Canada, Europe might be having Germany, Europe controlling area might have Britain, Now, these controlling areas, these company codes have the business areas, and business area covers everything. As I mentioned, business area belongs to the internal accounting, and internal accounting is operating concern is internal accounting. Okay, I have to ask you questions, guys. Now, I don't like the one-man show. Can you tell me, client is for financial accounting or for internal accounting? Please answer. Client. Type your answer. Please tell me, client is for financial accounting or for external accounting? Internal accounting or external accounting? I got 3 answers. I have like 9 to 10 people. Okay. The closest answer which I got is maybe both. Okay. And it is for both, guys. Client is for both. Client has everything. It covers everything. It covers the financial accounting. It covers your cost accounting. It covers your purchasing. It covers sales, production planning. It covers everything. Everything comes under the client. Everything comes under the client, whether it's financial accounting or cost accounting or anything. Is that clear, guys? Please keep in mind that client has everything, is on the top of everything. Now, please, operating concern. Operating concern belongs to cost accounting or financial accounting, or internal accounting or external accounting. Please tell me. Operating concern. If you don't know, say I don't know. IDK. IDK stand for I don't know. Operating concern. Is it part of financial accounting or internal accounting? I got only 3 answers. I need like 8, 9, 10 answers. Huh? Maybe someone has any duplicate, ID, login from computers and login from the system. Okay, I got like 6, 7 answers. Guys, this is operating concern is part of internal accounting. Is part of internal accounting. Yani cost accounting. Okay. Operating concern is part of internal accounting. Yani cost accounting. Remember this thing. Now, controlling area. Controlling area is part of internal accounting or external accounting. Yani external accounting is finance. Okay. Internal accounting is cost accounting. So please tell me, this controlling area is part of internal accounting or external accounting? I need 7, 8 answers. Please do not shy, okay? Do not shy. Just give me the answer. Or say IDK, IDK. The simplest answer is IDK. I will explain again. Okay. This controlling area is part of internal accounting. Controlling area is part of internal accounting. Yes, because it is cost accounting. So it is part of internal accounting. Now we have credit control area, guys. Please tell me, is the credit control area part of? Now I have 3 options for you. Internal accounting, external accounting, both. The credit control area is the part of internal accounting or external accounting or both. Very good. Credit control area is part of both accountings. Okay. Now the chart of account. Is chart of account part of internal accounting or external accounting or both? I'm talking about chart of account, guys. chart of account is part of internal or external or both? Actually, yeah, we are using the chart of account. Same chart of account we are using for, company code, and same chart of account we are using for internal accounting as well. So it is for both. Company code we are using for external accounting, okay? But it is linked with the, company code we are using for financial accounting or the external accounting, but it is also linked with the controlling as well, with the cost accounting as well. This business area is part of financial accounting or cost accounting, internal accounting or external accounting. Business area. Yes, Lina, it is internal accounting. Business area is the part of internal accounting, cost accounting. Very right. So one more time, guys. Client is for everything, okay? Is for operating concern, is the part of internal accounting. Controlling area, internal accounting, okay? Credit control area, both. Chart of account, both are using the same chart of account. And company code is for external accounting, but it is linked with the controlling, with the cost accounting as well, but it is linked, yeah. But actually it is. Now the task we are going to do in the case study, we will create the operating concern. We have the operating concern, we will not create it, we will use it. We have the company code, we'll create the company code, the business areas, chart of account, okay? Controlling area, we'll create the credit control area. You see, this is our organizational data. That is what we will create. By the way, some of you have done the sales and distribution case study. You remember the US00, the company code you were using, guys? Yeah, those were set up in this course. We will set up that similar company code in this course, and people will use it. So somebody did the setup for the US company code US00, and you people are using it similarly. And those were the technical guys, technical consultant. So inshallah, one day you will be the technical consultant. You will create the company code and people will use it. And similarly, you'll create the chart of account, you'll create the controlling area, and you'll create the credit control area, and people will use it. We'll enter the posting periods. Different periods are there. Field status variants and field status groups, you will enter these values as well. And then we will try to create some company code parameters, which are chart of account, credit control area, and fiscal years and posting periods. We will do all these things. We'll create, these are the tasks we will be doing using the handbook, using the case studies. We'll assign the company code to the controlling area. As we have seen that we have like company code is linked. Saudi Arabia has a company. This company is linked with the controlling area. Then we will link another company, Bahrain. So these kind of linkage of companies to a controlling area, we will learn how to assign a company code to the controlling area. We'll assign the controlling area to the operating concern, and these are the tasks that we will be doing, inshallah, in our case study. And then once we are done with the enterprise structure or organizational data, now we will configure, we will do the process configuration. And after that, we'll do the master data, and then we'll test the system. So let's see what we have in the process configuration. In the process configuration, we'll set up the company code for payment transaction. We'll create the account group. we will give the number range for financial accounting. You remember when you create the inquiry, you got a number. Then when you create a 101000000297, something like that. When you create the accounting, quotation, you got a number at the end of the day. These are the number ranges which we have defined. So similar number of ranges we will define for financial accounting. Similar number of ranges for controlling. So when we will prepare the document, when we'll save the document in financial accounting, it will be recorded as a number. So that is what we are. We'll prepare the tolerance group, guys. So we'll create the tolerance group as well. So then we'll go for the master data. Okay. General ledger account is a master data. We'll create the general ledger account. And this general ledger account has two segments. One is chart of account segments. One is company code segments. In the chart of account, if you see, we are having this kind of information that we will be entering. Company code will have like currency and all these kind of information. So we'll do, inshallah. We do have like sub ledgers and reconciliation. This is another interesting concept, guys. All our customers, receivable, vendors, payments, and assets transaction, they will be recorded into the sub ledgers. And then in the general ledger, we have a reconciliation account. We have one account. So when we will enter any amount that we are receiving from a customer, we will record in a sub ledger. It will automatically be updated into the reconciliation account. We cannot make any direct entry into the reconciliation account. No. For these three, we have to enter the amount in the sub ledger that will automatically go to the reconciliation account. At the same time, that is what we are doing in the sub ledgers. We do have a cost centers that can, by the way, this cost center belongs to cost accounting because of the word cost is there. So it is cost accounting. So in cost centers, we are trying to, collect the cost. Thus, collect the cost of anything which is happening in that particular space. For example, we have a photocopy machine. We declare it as a cost center. Now, what is happening on that photocopy machine? We are doing the photocopy. We have to purchase the paper. So that is a cost center. So any purchase we will make for that photocopy machine, we will assign to that cost center. Cost center may be 0001. And that 0001 is photocopy machine cost center. So we have to give a salary to the employee. Oh, we will assign that salary to the cost center 0001. We will purchase a toner for that, for the photocopy machine. The toner finished very quickly. So when we will create a purchase order, we will assign that purchase order to cost center 0001. So basically, we are collecting the cost on that particular number. We are collecting the cost on that particular number. That is cost center. So what is the job of a cost center? To collect the cost. It is just like you have different buckets. When you go for the purchases of a grocery, you put all the grocery bills into one bucket. Every time you go to Farm or Panda or Giant or Lulu Market, you get the receipt and put it into one bucket. Whenever you go for the clothing shopping, you put that clothing shopping in receipts into another bucket. When you go for buying a jewelry or something like that, you put it into the third basket. So what you're doing in the basket, you're collecting the cost. At the end of the day, you took all receipt from the Panda or stores. grocery stores, then you can say collect and count the cost. Okay, in this month I have spent like 3,000 real on my grocery. Then you go to the other basket and you collect all the cost for the jewelry. Oh, in this month I bought like 7,000 real jewelry for myself. So cost center is like a basket which collects the cost. Is that clear, guys? Okay. Now, if you see, we can have many cost centers. You know, like in the house, we created just 3 cost centers. Huh? One was for the clothing, and one was for for the grocery, and one cost center was for your jewelry and all the stuff. Similarly, in the organization, we have like different cost centers. For example, in my college, we have like 5 departments. So we can easily create 5 or 6 cost centers. One cost center for CIT program, one cost center for business, one cost center for human resource, one cost center for supply chain management, one cost center for safety technology, one cost center for administration. So any cost happen in different, we can assign to those. At the end of the day, we'll see, oh, I'm spending too much money on CIT program, and I'm not getting that much income from that. So that is what the purpose of the whole cost centers. So we do have the hierarchy of the cost center. Inshallah, in this case study, you will be creating the cost centers, and you will be having sub cost centers and all those stuff. Now, we do have cost element. The cost element actually, we just talk about chart of accounts, right? We talk chart of account. So actually, these are the chart of accounts or you can say, when we say cost element, means any expense account in GL is a cost element account. Here is a cost element. Actually, you can say cost account, no problem. Expense account, cost account. But just for a different, to make it different, to make it look different, we say cost element. We don't say cost account. But actually, it is expense account. In GL, we have the same number in our cost accounting. So every primary cost element in this internal accounting, in the cost accounting, has a link with the financial accounting. We did some expense, we record all the expense, we record all the expense in financial accounting. All the expense automatically comes to the cost accounting through the primary cost element. Guys, can you repeat this thing to me again, which I just said, just to make myself, that you understand what I've said. If you can't say, we can't, then I will explain you again. Okay, guys, I think we are talking too much. Can we have a break for 15 minutes? So, okay, one more time. The question was that any expense posting we made in financial accounting that comes to the cost accounting through primary cost element account. So since primary cost element account is linked with the financial accounting expense account, so any transaction you made there automatically comes in to the cost accounting. So we don't have to do any extra entry for cost accounting software. Is that okay? So primary cost element, when I say element, mean account. So element means this belongs to cost accounting. So primary cost element, which belongs to cost accounting, receive all transactions from financial accounting through the expense accounts. How is that? Does that make sense? I'm waiting for your feedback, guys. Okay. You know, whenever we make a purchase, we are doing the expenses. So any expenses you made, you record into the financial accounting. You do the entry of that purchase into the financial accounting. So that is what we call expense account or expense entry. Any expense entry you made in financial accounting automatically come to the cost accounting. Why? How it comes to the cost accounting? Because this primary cost element is linked with the expense account. This primary cost element is linked with the expense account of the financial accounting. So that transaction automatically comes to the cost accounting. If they are not linked, then whatever we have done in the financial accounting, we created an entry. We have to make another entry into the cost accounting. But this way, we are saving our time because they are all automatically linked. Okay. Now, we do have a secondary cost element. Okay. Secondary cost element has no link with the financial accounting. They're only working within the cost accounting, and they have no link with the general ledger accounting or with the financial accounting. And it is used for internal cost allocation among the cost center. Now, for example, we have a photocopy machine. This is the cost center. We have a CIT program. CIT program is also a cost center because we have to pay the salaries to the employees, the teachers, and we have to purchase stationery for them. We have to purchase computers for them. So they are a cost center. We have another cost center is business department. We have another cost center administration. We have another cost center human resource department, supply chain management department. So we have like different cost centers. Now, every department is making a photocopies from the photocopy center, which is a cost center. At the end of the day, photocopy machine says, hey, CIT program, you made these much photocopies. So this is the cost that you have to pay. Hey, business department, this is the photocopy you made. You have to pay this much cost. Now this cost is among the cost centers. So one cost center is asking another cost center, hey, you have to make this payment. You have to make this payment. You have to make this payment. And one cost center is saying, okay, can you give me this service? Can you give me this photocopy service? Can you give me this photocopy service? So they're talking to each other. It has nothing to do with the external accounting. So that is what we call secondary cost elements that only work within the cost accounting. Is that clear, guys? Good. Yes, internal costs. They are all internal costs. Now, if you see, they have like shown the real-time integration between the finance and the controlling. As soon as they made an expense cost here, you see the expense? Sorry, in the finance. It goes to the controlling through primary cost element, automatically comes in. And remember, only the expense will come here. Single entry. Here in the financial accounting, we have double entry system. We debit the expense and then we credit the bank because we have to make the payment. But in controlling, only one entry will come. Only the expense will come, not the second one. That is why we call it cost accounting. We are collecting the cost. And that, can you tell me, is that clear, guys? Okay, one more time. You make a purchase through the purchase order in financial accounting. So you purchase maybe stationery for 500 riyal. And you made the payment through the bank, 500 riyal. This is financial accounting system. Now, as soon as you made the expense posting for the stationery, this stationery posting comes to automatically to the controlling. Only the expense posting, not the second posting. No, this will not come. Only the expense posting, single entry will come to the cost accounting side. How it will come? Through the primary cost element, because this primary cost element is linked with the expense account in the financial accounting. So because of that link, automatically. If this link is not there, then what you have to do? You have to do this entry, you have to do this entry, and then you have to do the same entry, this entry, again into this one. You have to do manual. But because of the primary cost element, it automatically comes here. We don't have to do anything. And maybe this is the cost center. This is the cost center that is collecting the cost. Maybe photocopy machine. Huh? We purchased a stationery, any paper or toner for the photocopy machine. This expense comes automatically to this cost center, which is the photocopy machine cost center. Guys, is that clear? Zara, if it is not clear, I can explain again. No problem. You said okay. Okay means maybe I'm not clear. Maybe it's clear or maybe it's not clear. Okay, great. So we will do the general ledger account. We'll do some cost. Okay, we will create the cost centers. Okay, we'll create the cost centers and the group cost centers, and we'll do the entry for the opening period posting. We will do this thing, inshallah. And then we will, at the end of the day, we will do the process execution, and we will test the implementation, whatever we have done. So yeah, we'll do some business transaction, and we'll see if the transaction comes to the correctly or it didn't come correctly. So yeah, general ledger accounting basically is a double entry accounting system. You enter the debit and you enter the credit. This is what we call double entry. Okay, account payable is related to the vendors or the supplier. You can say that, and this involves the sub ledger. When you enter any transaction for the vendor, it go to the sub ledger, and sub ledger then automatically do the reconciliation account. Here is an example for the account payable. All these transactions, payable transaction, they come to the reconciliation account. Okay. These are the sub ledgers. These are the sub ledgers. They come to the reconciliation account. This is the reconciliation account. If you add up all of them, then you will see that you get this total. So as soon as you make the entry, it updated into the reconciliation account. It is maintaining here. And we have 3 entries here, but they're all updated in here as well in real time. Similarly, we have account receivable accounting. This is accounting is related to the customers. and this is involves subledger. So any entry we made for the customer, any payments or invoice or anything that comes to the subledger. And this involves the reconciliation account, account receivable reconciliation account. And you see here. So from this point, we can come to know that, okay, this is the receivables that we have. And from these customers, the detail is available in the subledgers, and the total amount is available in the reconciliation account for the account receivable. Then we'll do some, we'll do some general ledger account. We'll display, and we'll display some balances, and we'll do some posting, and we'll display the posting as well. There you go. So this is what we have for the lecture. Any question here, guys, before I move on to the next topic?